My name is Tom Otiende. I represent Mobikash Afrika, and we are starting off in Kenya, as you've mentioned, and Steve has correctly said many of the challenges that are already there. Really, what we set out to do was to create a product that was really driving financial inclusion, and we have come to realize really that financial inclusion means more than just being able to move money from one place to another. And this is what other success stories, such as M-Pesa, has really been able to do. The reason why I would think, maybe just to mention on something that you've spoken about, the reason why Kenya is unique in this way is that there's such a marked difference between urban and rural. And there has been quite a lot of movement from the rural to the urban areas. And so what happens then is the people in the urban areas are constantly sending money back home. Very similar actually to the diaspora situation. And in countries like Tanzania, that's not as marked as it is in Kenya, right? So many people are not sending money back home as they would because they are already, at home. And so what we did as Mobikash really was focusing on financial inclusion as a whole. We're looking at not just sending money, but we're looking at banking. We're looking at insurance companies. And as Steve has mentioned, this has led us to go into collaboration in a very strong way. And so Mobikash isn't just an open system as far as the platform is concerned, but it's open even in the business model. And so, of course, that comes with challenges in the sense that we are a third-party mobile commerce company. And so this means that we are not a telco, and it means we do not have the infrastructure for the telco services that we would need to deliver the service. And so that required that we do partner with telecommunication companies. And so the situation in Kenya then was that we needed to use a service that would be as universal as possible. And in that case, then we couldn't be looking at internet. We couldn't be looking at even mobile internet for that matter at that point. We would only be looking at USSD, which basically would be accessible to any mobile phone in the country. And so this meant that we would have to buy this particular channel from a telco. And in Kenya, we have four telcos. And so that meant that we had to go to Safaricom in this scenario. And as you know, M-Pesa is under Safaricom in the country, or in strong partnership in that sense. And so there was a bit of a conflict of interest. So that was one of the challenges that were forthcoming. But we did manage to get the service from them. And at the time, they were the only ones who were offering USSD. And so that meant that they had the ability to price it a little over the market as far as the service is concerned. We also had other mobile network operators because we wanted this product to be as universal as possible. However, they did not offer this service, this channel, USSD. And so that meant that we had to really almost educate them on the benefits of USSD. And the benefit for us was that it was in the middle of a price war when it comes to mobile network operators. And they had to look at other options when it comes to really creating revenue for them as companies. And so then USSD became a feasible aspect for them to look at. And so in that case, then we walked through, actually just all three other mobile network operators, we walked through with them and created partnerships on USSD as a channel. And I know Equity Bank is very interested in USSD as a channel as well. So that was a major challenge. Another major challenge, again, was regulation, because in as much as M-Pesa had been a great success, there was no real framework for mobile mobile money transfer and mobile commerce platforms in the country. And so again, we had to go through a rigorous process of about 2.5 years with the regulator. And you can imagine, when it comes to the capital expenditure and the operational expenditure in this particular case, that was quite a stretch for our stakeholders. However, this is something, again, Kenya being on the forefront, a framework has been put in place, and we were part of that formulation, and so we are very happy about that. And the playing field is actually coming to becoming more and more level as time goes by.
Tom, you've mentioned that right at the end, that the playing fields are now becoming a bit more level. So by that, you're implying that the playing fields weren't very level at the start?
Well, I mean, it was very, very difficult to enter the market. I will admit that. And Mobikash is an indigenous company, purely Kenyan from the onset. Of course, now being that we're growing, we need investors coming in. But it was very, very difficult. Just the fact that we did not have the infrastructure as far as USSD is concerned, that created, a sort of unfair advantage to the telcos, because the telcos are actually the ones who are moving the mobile commerce in that end. Of course, regulation, again, was also a challenge because for us, we had to go to, the framework wasn't very clear on where we fell, because with M-Pesa, for example, it was owned by a telco, and then it means it sat directly under CCK, which is the Communications Commission of Kenya, which regulates electronic transactions. Then again, because it's a financial service, we had again to go to the central bank. And going to the central bank, which is basically the lead financial regulator, they did not have a framework particularly that appertained to us specifically. And so then that meant that we had to come in, and it was a lot of fact-finding, a lot of risk evaluation. And so 2.5 years, as I'd mentioned, that would be a major hit for any any investor. Speaking of volume, really in the short term, when it comes to mobile money in Africa, a very crucial part of it is like any other business distribution, and that means getting financial agents, financial services agents. And so in scenarios like in the Kenyan aspect, the agency market is almost saturated in that sense, because other players are very dominant in that scenario. And so I believe, and I agree with you, I believe that having been in a business where it took so long to even get launched because of certain hurdles, which of course have been overcome and some of them still being processed, I think the distribution network is very, very crucial. People will need to have a place where they can deposit the money and withdraw the money. And so that's something that we have found to be very, very crucial. We found also that the market is, like I mentioned before, saturated. So then, speaking of interoperability, it cannot just be limited to systems where my system can speak to your system. I think we also need to have some sort of design where we can share agents.
Doing business in Africa, you can't afford to be without Africa Investor.